30-year futures chart. So this is obviously 30-year futures chart, long way to go, but just to look at it, I go ahead and get my take on it. And this is my first time looking at this, so bear with me. The first thing that stood out to me when I go to a weekly chart is just the idea, and I'm going to give this a look at, and then we're going to basically back study the 2022 mentorship model. Oh, good catch, good catch. Good catch. Hello, Sarah, how are you? All right. You guys got the screen? Did it come through? All good? Okay. All right, so this is the 30-year. First thing that resonated to me on the chart was just we had this BISI. And notice how we kind of invalidated it, pulled through it, and then basically kind of spiked through this. But notice where we closed, right? We closed right on the BISI of the consequent encroachment of it. So I'd be curious to know, obviously, if you can look over here, we've got an inefficiency right here in the form of a SIBI, and we've got another inefficiency right here, right? Price has so far respected these PD arrays with regards to these SIBIs. And I'm asking myself, okay, well, if I were to look from high to low and look at the EQ of it, right? We're in a premium. And so far we've respected these premium arrays in the form of SIBIs. Candle closure has respected them, we've pulled lower. We've invalidated a discount array right here. And we have a volume imbalance right here. So really on a weekly standpoint, I'm looking at this and I understand that as price, what does price do, right? It trades to liquidity points and it also trades to inefficiencies. Being so high in a premium in the way we've respected premium arrays, I would potentially want to see if price wants to push lower into this inefficiency and trade back into this equilibrium. Now that's on a weekly time frame. So if I go into a daily, and I'll remove these for a second. If I go into a daily, for the most part though, you do have a BISI right here, right? Price kind of didn't really respect it, came into this order block right here, these sets of down close candles. Now notice how we have volume imbalance, volume imbalance, volume imbalance. This is, I'm not used to looking at these charts, so I'm just kind of going to take it for what it is. Utilizing this BISI, if we want to respect it, I'd like to see price respect it. We've got a volume imbalance right here and a volume imbalance right here. So if I draw these out, right, I would say that you would want to maybe see price kind of potentially give way, right? We're in a SIBI right here too. We've got a SIBI right here that we could potentially use an inversion as higher prices, right? Price pushed up into this order block right here and have now been delivering off of it. You have a SIBI that could be used as inversion and you have some volume imbalances below. So although the higher time frames showed me that we could potentially want to go lower, the daily's showing me that we're kind of in this predicament where we have a lot of inefficient areas with regards to the volume imbalances, right? We have a shift in structure, right? We have a low, a high, price came down, made this overextended low, but we still have made a lower high with regards to this area. Now we're kind of still back into this inefficient area in the form of a BISI. So my eyes would like to see how sensitive we are to these volume imbalances, right? As long as we stay above this BISI, I would like to see price potentially move higher, right? I could see something like that play out. So as long as now that we've gotten back above this daily BISI, I would like price to actually stay above it. Is it going to respect this? It could. It might not even deliver lower into these areas, but with regards to where I see price probably heading, I like the idea of price continue going higher from what I see on the daily chart, right? Even though we did get outside of this BISI and we disrespected it, look at how we were able to run higher after we had delivered into the mean threshold of this order block, right? So if I'm looking at this, look at how sensitive price was to this mean threshold. We also have a BISI down in here that it was able to be really sensitive from, right? You can see that right there. So this shows me, although on the higher time frames it looked like price could go lower, From a daily stance, I'd really like to see if price actually is willing to respect this BISI. So over the next week, as we form these daily candles, look to see if it wants to be sensitive to these two volume imbalances, right? You've got an inverted SIBI, two volume imbalances, and you actually also have a breaker in here too, right? You've got a low, a high, a lower low, and then you break and clear the highs, right? So as long as price stays above, it looks like 120 would be my number. As long as it stays above 120 with regards to candle closure, I'd like to see you come and revisit this high, right? There's not obviously some data we can use here, but I would still remain bullish on this. I would like to see price come back and use this high as buy side liquidity and then eventually dig into this high buy side liquidity. If we do close back below 120, where could we potentially look for sell side targets? Well, you have a lot of inefficiency down here, right? Even though that's a stretch, I would start with these lows, right? Start with the equilibrium around 117, but note that it could start to actually make its run and cut through all these lows. You've got an inefficiency right here, an inefficiency below here. So my first take would be keep 120 in the back of your mind, and as long as we close above it, keep an eye out for buy side liquidity, right? Buy side liquidity would be at 125 and 126. You also have a volume imbalance right here that you could aim for in and around 124.16 and 125. You've got a volume imbalance in there. And as long as we maintain above 120 with regards to daily closure, I think you could see those targets be met. Now, if we do close back below 120, I think with regards to sell side targets, you could clearly see 119 being taken. You could see the equilibrium being met again at 117.26. And then you could start to target all these lows, right? You could start to target 116, you could start to target 114, and you could start to target the inefficiency right here from November 14th, 2023. And then around 113, 114, you could start to target that. You could start to target the lows in here around 112, and the big inefficiency and volume imbalance all the way down to, I would target as low as 110, right? In and around there. That's obviously a stretch, but with regards to going on further into the week, I would like to see if you want to make a low somewhere in here. You've got two volume imbalances, an inverted SIBI, a BISI, and a breaker, all favoring you to potentially see higher prices. So just keep that in the back of your mind. Hopefully that answered some of your questions. When you go down onto a, this chart's a little clogged up here. I'll see what goes on a lower time frame. So if I go into a 4-hour, right? If you go into a 4-hour, if I'm using the extensions from this last swing lower, right? And I'm using that fulcrum point, I like that the -4 is above it, and I think if you actually were to sit here, you could even use the -3.5. -3.5 sits just above these relative equal highs right here. You can even sit here and say if we had the -2.5 also, right? We just spiked through that. So to kind of refine it, you do have a SIBI right here. You can see how that's where we've revisited it to close out the week right there. Curious to see that. I would like to see also, with what's above us, if we do retrace, you do have this 4-hour SIBI. If we close above the consequent encroachment of this, right? If we close back above the consequent encroachment of this, I would like to see if we can use it with regards to support, or maybe it is a little bit deeper. If we start to use the bottom half of it as support also, right? You'd want to start to see this SIBI be used as support, however it wants to do it, right? Whether it goes below here and uses this as support, or it goes to the consequent encroachment and starts to use that as support, we'll start to identify how bullish it is. Also note, you have this BISI, right? Notice how it's already inverted so far. So your expectation is that it could use it as resistance, but if we do get back above it, right? If we do get back above it, you would want to see that start to respect it like it normally should, right? So note how it plays within the SIBI. That should give you an indication whether or not this low in here and these lows should hold. If we do use it as support and actually start to cut our way through it, you could start to see higher prices. And obviously if price does respect it, right, you can see price come into here and you can see price continue going lower. There is no efficiencies in here that I see playing out. Everything looks like it's been filled. So there's no inefficiencies that price would need to go through in here to at least fill price. Everything on the 4 hour has been filled. You do have some breakers. You could use some order blocks to kind of guide you, but you can see for the most part there has been really no inefficiencies. Up here, same thing. You had a little 4 hour volume imbalance in SIBI in here, but there really is no inefficiencies for the most part. So I would just keep my main focus on this 4 hour SIBI and this 4 hour BISI to see how it wants to react with regards to behavior there, right? And then from there, if it does want to use it as a bearish stance, that would signal me with regards to the idea that if we are going to come back lower, we're going to come back and revisit this. And if it doesn't want to use it as inversion and cut through, then we could potentially see lower prices. And if that's the case, there's nothing in here that's really stopping it a whole lot besides these inverted SIBIs. There's no buy side imbalance, sell side inefficiency that could cause it to fill and go higher. So you do have some clean lows in here that you might want to take it for a bearish stance. This is my first time ever looking at this chart. Hopefully this was somewhat insightful to you. I forget who requested it, but for the most part on the daily, I am expecting price to go higher. So we will see if we want to get back above this SIBI and this BISI. And if so, I would definitely aim for higher prices and inside the 125s and higher. But if it does respect that 4 hour SIBI, you could potentially see a run lower into 119. Hopefully that was insightful. I'm going to go into NQ. Check the chat really quick. Yeah, not a problem. Okay, so I'm going to clear my chart on NQ. So today we are going to be studying the 2022 mentorship model. And I'm going to kind of just before I get into the chart, we're going to talk about what that model is, what it consists of, right? So I'm going to add some bullet points here. Couple things. To me, I noted just from my previous studies, there's 4 main things that I would be looking for within this model. It's a very simple model, and I think that that's why it's so effective. It is not as simple as something like the silver bullet, but I think it's something that is, with a little bit of study, you can start to see it. So the first thing that we're going to want to note is these are the requirements for this model. You want to see delivery into a higher time frame PD array. Right? That's the first thing that you want to see. Oops. Delivery into a higher time frame PD array. The next thing you want to see is some form of opposing liquidity that's been taken. Right? The next thing is you want to see a market structure shift. And this is going to be the process in which you want to see it. You want to see a market structure shift, ideally created by a fair value gap. And then you want to look for relative equal highs and or relative equal lows that are usually paired with the -2.5 standard deviation, my OCD, sorry. Standard deviation of the Judas swing, right? And that Judas swing is going to be that area. So the run on the opposing liquidity that you're using after delivering into the higher time frame PD array is also going to be paired in what you're going to use to find that -2.5 standard deviation. And you're going to look to see whether or not there are relative equal highs or lows and or just any highs and lows that are created in and around that -2.5 standard deviation. So really, that's the main thing right here, right? You want to see price deliver into, and I'll mark it out right here. So we're going to have a higher time frame PD array. You've got a higher time frame PD array, right? You want to see price deliver into that higher time frame PD array. You want to see price take out liquidity, opposing liquidity, with a market structure shift, right? So this is going to be your market structure shift. And you're ideally going to want to look to see if there's a fair value gap that creates that market structure shift, right? And then from there, right, you're going to want to return into that fair value gap. And that's where your entry model is going to be, right? We'll talk about stop placement, but for now, where you start, right, where you start your study is you enter in on the fair value gap with the idea that your stop is at the high that takes out the opposing liquidity, right? That's the idea. We'll make this dotted or dashed, right? And then what you're doing is you're now looking to see this as a Judas swing, right? And you're looking at 2.5 standard deviations lower, and you're looking to see what low is in here, right? And that's your target, right? Does that make sense? That's what we're looking for, right? And then this should be our entry in here. Right, so that's what we're going to go back test tonight. What is considered a higher time frame? A higher time frame is relative to whatever menu you're trading in, right? I would say a higher time frame could be a 4-hour or a 1-hour, and I would go no lower than a 1-hour. I would say a higher time frame could be a 1-hour, a 4-hour, a daily, a weekly, or a monthly. So this is going to be something that's derived from the 4-hour, 1-hour, daily, monthly, or weekly, right? So this is the model that we're looking for, right? Now, over time, you can start to find through your studies and backtesting, and that's what we're going to find tonight, examples where obviously you want to start with stop loss at this high, but there are areas through our studies where we can start to refine this, right? And as traders, we start to know, right, our entry is not as important as our exit is. And our exits in the market are crucial, right? And that isn't just your take profits, that's also going to be your stop losses. So through that, if we can start to find models and customize models to where our stop losses can continuously be refined, that make sense, that are still true, that's when we can start to have a greater run on our equity curves and stuff like that, because we're able to risk more, risk more in a smaller area because our room for error is a little bit smaller, right? So if I'm risking 1% up here, right, and I'm risking 1% right here, my volume now becomes bigger, right? I might only, 1% up here might be one contract, but 1% down here could be 2 contracts. Right? So you start to see that the more you can refine your entry, the more you could potentially get out of the market with regards to percentage. But overall, notice how this risk to reward starts to grow, right? Up here, it's 1.91. Now we don't want to necessarily focus too much on risk to reward, but it's something to think about as you start to begin as a trader is if my stop loss is up here and I risk 1%, right? My risk reward is 1. Or excuse me, it's a little under 2. But if I even cut that in half, now that becomes 3, right? So what I'm able to get out of the market is more, right? I'm able to squeeze more juice out of that lemon. So that's something that we're going to backtest. Any questions here before we go into the market and start to look at some things? So the market structure shift is when the higher low gets taken out after the higher high. Correct. Correct. Arish, Josh, Mauricio, Ismail, Henny, Finchy, Honora, Sarah, Pablo, welcome in. Hello, guys. So this is just obviously what we're going to be backtesting tonight. And we're going to backtest it on NQ. We might backtest some stuff on ES. But we're going to go in and just backtest. I have no examples that are set up. I'm going to just completely go at the market raw. I have not looked at anything prior to this. I just sat down about 15 minutes ago, so I have not really had time to even look at anything. We're going to just go straight into it. So if you guys have any questions, comments, or concerns, obviously I'm trying to record this, so hopefully it's recorded, but you guys can also take a screenshot of this as well if you guys need it, or hopefully you guys are taking notes. Let me double check and make sure. When you start backtesting a model, do you start with a fixed time to look at for these setups? That's a really good question. So with regards to the time in which, right, I'm looking for the model in itself, and then I'm looking to see, and I'll mark what times that it occurs, right? So this model will occur outside of specific macros, yes. But I'm looking for the model, and I'm looking for the pattern first, and I will align it with what time that looks at, right? And you could do it vice versa. You could look at time, but really I want to try to find the pattern first, right? When you're backtesting a model at first, you want to try to find the model and then try to compare that with what time that's occurring. Odds are over time you'll start to see it, but I'm looking for the model first, right? So the first thing I'm going to look at is we're going to go look at specific higher time frame PD arrays, and then we're going to go in on lower time frames and see what that delivery in and around that higher time frame PD array was, right? And we're going to be looking for these things, right? We're going to be looking for price to push up into areas, take out liquidity with a market structure shift with a fair value gap inside of it, utilize that Judas swing higher and or lower to identify the negative 2.5 and see where it lines up, and we'll mark it up, and then we'll start to play with where that stop loss could have been played, and we'll align with and we'll take note of what time that's occurring, how long was the trade, what time did it start, right? All that stuff we'll take into effect. But I'm going in it with the idea of I'm trying to identify my eyes on the pattern. Once I've identified the entire pattern, right? Once I've identified this, then I'll look down here and I'll say, okay, well, what time did this occur, right? What time did this occur? And did it occur during specific macros? Did it occur against specific sessions, specific days, right? Specific weeks, right? I could go back and look to see if there was a specific news event, all that stuff. I'm gonna go ahead and I've got to play some music in here really quick. So there we go. Got my music on. All good. Everyone here. Then if we will go ahead and get into it. And we'll start with just this week's price action. So we're on a 4-hour. Just going to go ahead and mark out where we started this week. So this week opened up on Sunday, January 28th. And we're just going to go through the whole week and just kind of start looking at it. Sunday, January 28th. Should have been right here. So this was the week that we had so far. And we're going to just basically start marking out inefficiencies, right? So obviously, you want to start to think in your head, well, where would I have wanted to be in this market, right? We wanted to be buyers down here, right? We wanted to be a buyer down here. If you could see how it played out, we wanted to capitalize on these longs. So I want to sit here and I'm going to just start with this 4-hour inefficiency, right? I'm going to just draw that out right there. What I'll do is I'll also make sure that this goes into lower time frames, and we'll mark this as a 4-hour BISI. Right, so we've got that marked out. Now let's go on to a 5-minute and let's see what price was doing when it delivered in here. Right, and I'm going to bring the replay tool in this. We're going to follow this along as we do this. All right, so price, this is when price first delivers into this higher time frame PD array, right? So as we start to do this, what are we looking for? We're looking for price to take opposing liquidity and then take, for this instance, the high with a fair value gap. And I'll speed it up a little bit. Okay, so price now has what? Right, we can start to track it. Opposing liquidity, I'm just going to put OL. We'll make it dashed. All right, that's our opposing liquidity. Or actually, I'll just make it an X. So now we want to see if we want to deliver above this high with displacement. Is there a fair value gap that's created around this area? Right? Well, you can see there didn't really create one here, but we can, right? There wasn't really one directly, because I'm looking at this high and I'm looking directly over here, right? If there's not one in here, right, we can still test it and we can look to see from here, there is a fair value gap, but the high was not taken. The high was not taken. Now, if I'll play this out, but then you can also go lower on the 1 minute and you can start to look. So there wasn't really any displacement, and if you look to see here, if I were to go here, right, and let me just use this as our market structure shift. Right? The 2.5 doesn't line up with any highs. Right? It does line up with an inefficiency though. Right? So overall, you want to note though that if it doesn't line up with any highs, you want to look for specific relative equal highs. Well, there's really no relative equal highs in here either. Right? You just have inefficiencies. Right? So there's no clear draw either. You want to kind of keep that in the back of your mind too. So we're going to keep playing it out. And you can see that we actually end up going lower. But I want to go back and I want to see if there was something that I could have maybe capitalized on a smaller time frame. Right? So maybe that nothing unfolded on a 5 minute, but we know that we're using other areas too. Right? And just as I look at this, there's really nothing here that I could have really used. So really nothing presented itself right there with regards to the 2022 model. So I'll bring this out. We'll play this out again. I'll go back to the 5 minute. I'm going to speed this up a little bit. Just to get us back where we were. Okay, so now we're back in here. Now I'm going to delete this and I'm going to start looking for a swing high again on a 5 minute. We deliver lower into the BISI and I'm looking for a swing high, right? So when you're looking for market structure, right, you want to keep in mind this 3 candle pattern, right? Something that looks like this, right? And I'll make these all lines in here, right? We're looking for something to form right there, right? The only nearest one right now is right here, right? And that's very far. So we want to continue to wait. Oops, that's a little too fast. Slow it down a little bit. Right? We have one right here. Right? We have a swing high. We take it. Now we have a market structure shift. Now you have to be able to view this. So we have a market structure shift right here. Was opposing liquidity taken? Yes, but it's not in the model in which you would see it. That's why you kind of have to be gray with it, because you have a market structure shift here. Where was the liquidity taken? This is where the opposing liquidity was taken. So you're kind of fractally having to be a little bit gray with it, right? that's what's a little bit hard about it, is you could view this as opposing liquidity was already taken. You have this low taken. You have a market structure shift in here. Now you have a fair value gap that created this. You would wait for price to pull into that fair value gap. Right? Let's just say you put your stop at the low, even though that's not ideal. Now, if this was the opposing liquidity that was taken, what would be the Judas, right? This would be the Judas. You could use this, right? And you can see that you have relative equal highs in here, right? You've got a high right here that's around the -2. The -2 is above it, but I like that the -2 lines up right at the high, right? The -2 lines up at the high, so it's not always the -2.5. You want to use what aligns with market structure and where liquidity lies, right? So I like that the -2 is there, right? So that would be an area where I would want to potentially look for. Go a little bit slower. Hey, Victor. Right, so that would be your entry right there. Right? As price dips into this area, right there on this down close candle, right, that's where you would want to go long. I'll come back and I'll talk about stop placement, but that's where you would want to go long, right on this down close candle. As price is coming up, right, we want to be buyers during sell closure and down closure, and we want to be sellers on up closure. So as price is delivering into this, right, we want to be buyers, right? The least threshold. We don't want to wait for it to come down to consequent encroachment because it might not. We don't want to wait for it to fully fill because it might not. We want the least threshold of entry, and it has to at least come in there. So on this candle, right as it dips in there, is where you want to be a buyer, right? What time is this happening? That would be at 12:10, right? That's not ideal, right? That's lunch hour. That's right at the very end of the lunch hour macro. So keep that in mind. Right? You have the lunch hour macro from 11:50 to 12:10. So keep that in mind. We'll fast forward a little bit to see what happens. Right? If you wanted to pyramid, you could throughout this, you could, but now you're just waiting and you're watching, right? Also note, this is not, you can see how many handles this is for a trade, right? This is a very long-term trade just because of how big the Judas swing was, which don't be scared by that. You should be encouraged for it because you can take partials along the way, right? Where do you have relative equal highs? You've got relative equal highs right here, right? You could take a partial in here. You could take a partial right here. And I'll kind of follow those as we go. All right. Price comes back in, revisits it, right? That's why you let it breathe. That's why the least threshold of a stop loss would have to be at the low, right? Because what did price want to do? There was a little tiny BISI in here that it came and filled. So you have to at least have your stop loss below this BISI to at least allow it to deliver, right? You finally get some displacement and you're able to take a partial here, right? You're able to take a partial here. You taking a partial here could allow you to therefore then at least move your stop loss, not always necessarily to break even because you see how big of a trade this could potentially pan out to be, but you could at least throw it below this BISI now that price has delivered at least to it twice and you got displacement following, right? Even though that's not a lot of risk adjusted, it still goes a long way over time. So you've taken a partial right there. Let's just say you had 3 areas of partials you were looking for, or 2 areas and a terminus. Let's just say because it's such a longer time frame trade, let's just say you're learning to trade and you wanted to do 3 micros, right? Now you're wanting to follow something And I'll also note, what else do you have, right? So looking at it again, what else do you have? Well, you have, and I'm going to just put this over here for now. You just had another form of the 2022 mentorship model take place, right? So I'm going to take this off for a second so you guys can see clearly what happened, right? You had opposing liquidity being taken right here. So let's say you weren't as keen to maybe necessarily get into that, right? Opposing liquidity taken right there. Opposing liquidity taken right here. We're still in the higher time frame area. You have a market structure shift. With a BISI. So if price delivers in there, right? So we'll keep this right here for now. So y'all can see this one potentially play out. I'll even throw that down there. We'll keep that right there. But now you have another ideal one, right? Right here. You could potentially use this. Stop would go at the low. Right? What would be your Judas? Well, now you would use this as your standard deviation tool. Where's your negative 2.5? It's right here. Right? That's still giving a profitable risk to reward. You're still at 2 to 1. Now this one is only above the, notice how this negative 2.5 is right above the relative equal highs. I would suggest you just learn to, even though you're aiming for that negative 2.5, just pull it down to here, right? And that would be your trade there. So there's two trades in here that are potentially able to pan out. Right there is where you would enter, right? Right in that down close candle is where you would enter. Stopped out on both. Note it. Now here's the thing. When would you have entered this one? Right? 1450. If I'm not mistaken, that's 250, right? 250, 13, 12, yeah. So at 2:50 p.m., you would have gotten stopped out. This trade wouldn't have worked. Okay. On this trade, you would have been able to take a partial right here, move your stop, at least to this low. If you wanted to manage it at break even, you could have. But more importantly, overall, you can have a consensus of, I would have been able to take a partial here, and I would have been able to either move my risk to break even, got a little bit out of it and break even, or I would have gotten a little bit out of it and gave a little bit out of it back. I was able to at least move my risk to this low. Both would have not necessarily hit, right? Now note, both entries, one was at 1210, the other one was at 250. Not ideal areas, right? This is what you learn from backtesting, right? That's why you look for the model first and then look for the time, right? Note, why would these might have not necessarily lost, right? If you cannot remember on Wednesday, what was Wednesday? FOMC, right? Keep that in the back of your mind. So I'll go ahead and clean these up for now. And we'll just keep playing though. We'll keep playing with this higher time frame inefficiency. I'm gonna take this off for now. I'll leave those relative equal highs up there though, right? So now we can still follow it though. We're still inside this higher time frame PD array. Still inside this higher time frame PD array. We have opposing liquidity being taken in here. Price is still respecting this BISI. We come higher. No market structure shift. See, there's no market structure shift in here, so we're still just waiting. There's no market structure shift at all that's occurred in here. You have a swing high right here. This is all overnight trading. Going into the London session. right? Now we start to have a form of some market structure shifted here a little bit, right? But notice where we're delivering in. You have to note though, there is a SIBI right here. All right, so now, what time was this at? This was at 8:15. So you could have viewed this while we're still playing on the lower half of this BISI. You could note this is a low. You take the liquidity of the low, you market structure shift with the high at the BISI, and it does deliver in here, right, at 8:15 on Thursday. So this one's kind of hard to read, but it technically still fits the criteria. We're in a higher time frame PD array. You take this low right here, right? You can see that that low is taken very quickly, and you shift, right? You have your market structure shift. You have your opposing liquidity taken right here. And then you have this delivered in there. That would be your entry at 8:15 with your stop at the low. I don't like the magnet tool, how it does that. Right here. Stop would be at this low right here. You'd look to see what the 2.5 would be. 2.5, there's really nothing that aligns with the 2.5 though, right? So it's something that I would be cautious with, right? And I would really only look to try to see if you could get the partial here. And then I would really want to aim for, this is really the only thing that you could really aim for, right? You would get a partial here and then potentially look to see if you could get that high in here, right? Also look how much time we took, right, to play in here. Now you could start to use this as AMD. You've got accumulation, manipulating down, potentially seeing distribution through. But really there's, on the 2.5 standard deviation, yes, you can still use it, but overall, and we'll see how this plays out. Right? Delivered back into it, right? So this is at 8:15, this is at 9:30. Aha, right? Now we're sitting here and now we're at a time window. Now time is now on our side, right? This is pre-market. This is right at market open, right? So now we're starting to really understand where time could potentially benefit us, right? Even though you can still have this entry, that's okay. This is where you're wanting to wait, because now notice how price came up and came back. Now if we're going to be profitable, we want price to start to trade in our direction. Right? I don't know, there's the news event, right? That's why the stop goes at the low. Stop goes at the low. If you wanted to wait till the macro, you could, and you would be getting in at the same entry in and around this area. So whether you enter in at 9:30, more so you could wait till 9:50, 9:10, whatever the case is. I don't necessarily like entering it right at news. So really, I would want to enter in and around equities open if I was getting in. From there, you let it breathe, right? This is okay, right? You're going to have drawdown. This is going to be scary for a lot of you as you're starting to start your trading, right? Having price come all the way. This is why we have stop losses, right? This is why this goes here at this low, right? And that's why you start there, because that's the best stop loss you can technically have, right? Especially when you're dealing with news events. So from there, right, now we look to see if we could potentially get partials out of it. Prices engineering relative equal highs. you also have a BISI in here, right? So same thing. Even though this all is playing out, we've got another one that's playing out right in here. You have a BISI. You have a market structure shift. Or I'll even just drag these, right? You have a market structure shift. Was liquidity taken? Yes. Whether you want to view this low or you want to view this low, it does not matter. Opposing liquidity was taken. The opposite party got purged. In the market structure shift, was there an imbalance? Yes, a BISI. You're entering in on this candle. What time is it? 10:20. That's fine, right? This would be the safest entry, right? So although we're still sitting here and we're looking at if you want to play aggressive, yes, you can use this. But notice how the 2.5 didn't necessarily line up, right? We want to look to see if all the stars align. So with that being said, on this Judas one, let's see what the negative 2.5 gets us. Bingo, right? Negative 2.5 is above this high. That's what I'm looking for, right? So even though we could sit here and we can still utilize this one down here, which is based on this Judas, right? We could still use that. It's just a lot trickier of a trade. We want to be in and out, right? And that's where time comes in. News was at 10 o'clock. Odds are we want to be trading after the news. We want to be trading post-news. Let the manipulation take whatever party's out. So if we knew that news was at 10, we would be looking to be a participant after 10, even though there's setups that can still unfold, and you can see that there's entries that offer themselves. We want to note that time is obviously more important. Even though it's not the first thing we're looking at, we want to align it with something that could potentially occur. So we have the market structure shift. Opposing liquidity has been taken. We are inside a higher time frame PD array. We have our Judas swing lined up. So now this one would potentially look like this. Right? You're getting in on that candle. Your stop loss goes at the low. You're looking for the negative 2.5. Right? And ideally, you would want this to trade towards and deliver prior to noon. Now, will it always? No. But that's where you start to go on the clock, right? This should get up here before noon. Right? That's what you want to potentially look for. Right? So on this one, right, if you were in this trade in here, you could have easily taken a partial right here, and that trade would have, at least for whatever the case is, if you entered in down here, right, I would be taking a partial right here. Right, you've got relative equal highs that just got purged, so you're taking a partial in here. You also have an area that's already been fully filled with this right here. So this area would just go to break even, right? You would want to go break even because now you've got an area right here. And obviously, as Henry's been preaching to you guys too, go up on that higher time frame. See if you're creating a higher time frame imbalance. That's going to be so key to your guys' trading too. It is, as you're looking to move your stop, go on a higher time frame and start to work your way down to see, are we creating any new imbalances, right? But overall, right, you're taking a partial here, and the way price delivered in here, you could go break even on this one. But now I'm really focused to see on if we start to get expansion higher in here. Stopped out. Carson, why is it doing that? Carson, why is it doing that? This is why, when you go and backtest, this is why myself and Henry have preached to you guys why we don't necessarily want to focus on trading on an NFP protocol week. It's called NFP protocol for a reason. Because if you've heard us talk about seek and destroy templates, right? What is price doing? Right? It's doing this. It's not accounting for PD arrays. You can see it in here, right? It's only aiming for highs and lows because now watch what price does after it takes lows. Watch it slowly make its way back up. Right at lunchtime, and it starts going higher. right? Notice this price action right here, right? Low. You have a high, a low. High, well, not necessarily a high, but low. Take it out. Take it out, come back, take it out, right? You're not going to find profitability in these trades. How can you protect yourself, right? If you're not necessarily on something like this day or that specific time throughout that specific week, you ideally want to see price do this, right? You want to see price continue going higher here, right? This is a very clean idea of the 22 mentorship model, right? You have, and I'll delete most of this stuff. Hold on, I know my charts are getting a little clogged. Let me delete some of this stuff, right? This is a very pretty clean cut and clear, right, type of model. From here, you want to see this continue to play out, right? Price has no business going back into these areas, especially at this low, unless you're trading in a market condition that is in a seek and destroy template, right? Where it doesn't matter if it looks like it's respecting this. What it wants is this, right? What it wants is this low. Because what did it just take? This high, right? And if you start to even look in here, right, it's in this pattern and it just starts to expand and seek between highs and lows. The megaphone, yeah, it literally looks like a megaphone, right? And so through your backtesting study, it's not that this doesn't work. It's in the day, it's the day of the week and the time, it's the time aspect that's not making it work, right? Because if we continue to go out, and I'll fast forward a little bit, right? Now, if we sit here and we look at this again, it's still occurring. It's still occurring, right? Opposing liquidity taken. Market structure shift. We're in a higher time. We're still in this higher time frame PD array. Notice how long we've been within. Look at how much damage we've done between highs and lows, all between this. Look at this damage right here. This is seek and destroy in a nutshell right here, right? Market structure shift. Opposing liquidity has been taken, right? We have the idea of this, right? You could be a buyer in here. We have, obviously, another BISI in here. Where would your stop loss have to go? Right? Technically, you would have to go in here. Your stop loss would technically have to go right there. Right? If you're looking at the Judas, oops, wrong one. Oops. Nope. If you're looking at the Judas of it, where would you be aiming? -2.5. Right? You would have a partial here. And this would be your terminus. Right? The -1 lines exactly up with the partial. And you're right in between that 2.5 area. Right? It lines up with these relative equal highs. Relative equal highs in and around the same area of the -2.5. The -1 lines up with the exact high here. What time would I be entering in? 12:15. Not an ideal time either, right? That's another thing too, is seek and destroy, right? If you have the ability to, which 99% of traders aren't going to, they've already been chopped out, right? You tried trading the equities open? Nope. Odds are your stop got hit. You tried trading the 10 o'clock news? Nope. Odds are your stop got hit, right? And what's to say that it doesn't go back for another one, and then go, right? But we'll still sit here and we'll still test it, right? I'm still testing the model. I need to see the model, right? We're in a higher time frame area. Opposing liquidity has been taken. Market structure shift. This was the BISI that created the market structure shift, right? I'm going to start studying it just by putting my stop loss at the low. And we'll see what happens. Let me just take this through here so y'all can start to see, right? I would use that as my terminus, right? Partial take in here. You could move your stop a little bit. If you want to move it at break even, you can. If not, I would adjust it. Whatever that's you as a trader, right? And then your terminus gets hit right here. So you would be marking, okay, well, I entered the trade at 12:15, right? Entered the trade at 12:15. I was within drawdown, right? I occurred drawdown for about an hour and a half. I'm sitting here watching this. An hour and a half, right? Overall, though, did my terminus get hit? Yes, my terminus got hit. But I'm basically from 12:15 until market close, right? Not quite market close, but about market close. I've got to hold this trade, right? You've got to be able to hold that trade. Not fun conditions either way, right? You've got to be pretty good to hold it for that, right? And really, it's not hard holding it for this. If you guys have noticed, it's not hard at holding a trade when it's going in your manner. What's hard is this, holding it within this, right? That's why if you know to keep your stop loss here until this gets taken, right? Whether you want to make the move to throw it at break even or throw it at this low based on how it traded within these two BISIs. And these could be several areas where you could potentially be pyramiding entries. But overall, I still don't like it. It's not a time that I would trade, right? I have to note that. I don't trade the lunch hour. This is not a trade I could have taken. If you're on the charts and you trade the lunch hour or you look at it or you're watching it, great. But overall, it's not a trade. But did it work out? Yes, right? You have a higher time frame area, right? You have a higher time frame area. Now there's another one that you could potentially have used in here. And it's still roughly, so this is one example of it, right? That it played out. You've got opposing liquidity taken. We're in a higher time frame PD array, right? We're in a higher time frame PD array. So if I draw this out, right, just to match what it looks like in here, we had a low, we had a high. We took out the low, we took out the high, right? In here, you have the X right here, right? So this is this right here. You have the market structure shift here, right? This is this. Did we use a fair value gap to do it? We did, right? You can see right here. That was the fair value gap that did it. Now there were two fair value gaps in this example, right? Sometimes it'll fill both. Sometimes it won't, and it'll only fill this one. This is why this has to be your least threshold of an entry, right? You can put one contract here and pyramid contracts as you dig deeper. That's fine. But overall, that's what we're looking at, right? As price delivers into this area, right? We are a buyer. Our stop is here. We are taking our Judas swing. We are extending it out. And we're looking to see, are there any highs and lows that resonate in and around the 2.5? Well, we have relative equal highs right here. Would you say those highs are technically relative? I would. right? Relative equal highs. Is it somewhere near in and around the 2.5? It is, right? Obviously, this measurement is not as to scale as this one was, but you can see that there was a 2.5 negative standard deviation sitting right above it. It's not always going to be right on it. Don't expect that. Let it be in the vicinity, right? But overall, right, you would look to see if there's a high or low somewhere around here, right? So this was this. You've got to be able to train yourself. It's not going to look like what it looks like with the lines. You've got to know the context, right? It's all contextual, right? And unfortunately, on the lines, you could sit here and this is what you're looking for, right? That's not the reality of it. The reality of this specific backtest was it went like this. Right? That's what it looked like in real life. Something like this. That's where when we say you have to look at the market from a gray perspective, that's looking at it gray. Right? We can do the line markups and that's what it looks like, but this is what it actually looked like. Right? The only thing that you want to note is the time. You want this occurring, you want to look for this to occur in a time window that's, for me, technically a little bit more suitable than this. Right? I wouldn't have participated in this, but that's okay. We've got more price action to test and backtest. Any questions, comments, or concerns? I haven't really looked at the chat in a while. Is there another 2022 at the end? At the end, what exactly do you mean at the end? Miss Sarah. Like right before the partial. Are you looking at, let me delete some of this. Are you looking right here? Is it in a higher time frame PD array? We've delivered off of it and you could use that as context. You could definitely use that as context. The one I would say you're close. You have that idea and technically it could be used. There is a BISI and in reality it is, right? You do have that. But I would also say as to look to maybe for something like this. To me, I want it to occur as close to and in and around that higher time frame PD array as possible. To me, I would look for this. That would make sense to me. I see it if it's out of the higher time frame array though. Yes. Yes. Right? That's the factor. Now this would still technically play to context. And to me it's just it doesn't always necessarily have to be in it, but you want it, this is, even if it's pushing out of it, that's okay. But here, right? You would go here, right? 1550. So you're in the PM session, pretty late in the PM session. Stop loss would have to go to this low. Right? And you would have to look to see -2.5, right? So this one would have been ideal with regards to the time aspect of it. You're trading in the PM session, right? And it runs to your high relatively way quicker. This is the one that we all want, obviously, right? That's what you want to see out of your trades. So it's still there, it just looks a lot different. This one's a lot harder to see. But you still, same thing, higher time frame PD array, we're inside of it. Opposing liquidity has been taken. You get a market structure shift made with a fair value gap. You get a return into it at 350. And it runs higher within the next. Notice how the 2.5 is right next to your terminus. Right here, still there. You could still take a partial off right here if you wanted to. And from 350 until 430. That's the thing. It's hard holding that trade. This was a hard. That's why the time aspect, right? And in these instances where you're in this NFP week, right? You're gonna get things like that run very end of the day, right? Very end of the day, it finally doesn't run. Look what it did when all. What was price trading like when all the traders were looking for it, right? It knows when traders are trading. And so when it's doing that, it's going to go into that seek and destroy template. By that time, you think enough traders have gotten stopped out and have used enough mental capital and are just completely burnt out and impatient to where they're just done for the day and throughout all this. And even this, and then at the very last couple minutes of the market, boop, right? There's a reason why it was targeting this liquidity, right? So on this trade, is there any way you would refine your stop loss or keep it at the swing low? Are you wanting to look at this one? Or are you wanting to look at this one? This one we covered or this one? 1 or 2? One. Yeah. So, good question. So we'll come back over to this one where we basically had this right here. Right? He's looking at this. He's looking at this. Now also, that's another thing too, is when you're considering stop losses, you have to consider conditions. Right? You have to consider conditions. But if we're taking conditions out of context right now, right? Obviously, the most safest stop you can get is at the low. So at any condition, you know that you're the safest with it at the low, okay? But let's just say we're not necessarily hypothetically in such a high resistance liquidity condition. Where else could I put my stop loss? Well, there's a couple places, right? So we have this SIBI right here. We have a SIBI right here, right? That's protecting me with regards to inversion, right? Price came through it and can use it as inversion. I could cut it to there, right? The inversion aspect of the SIBI is allowing me to potentially utilize that, right? So I could cut it there. I could go as far as, but no more than the candle that created the initial BISI, right? That's your most aggressive one, right? So really there's 3 areas where you could put your stop loss. The low, which is the safest, the SIBI, right? So that's 3 PD arrays that are protecting you. You have 1 BISI, 2 BISIs, and a inverted SIBI, as well as you also have a breaker in here. So you could also utilize that also, but we're not going to focus on that. So you've got the low, the SIBI as inversion, right? Balanced price range. And then the most aggressive would be, I would say, the consequent encroachment of the 4-hour BISI, right? You've got the consequent encroachment of this, which is really actually also the low of the candle that initiated the first BISI, right? But since that's so close to consequent encroachment, I would take the extra points to just put it below that, right? This down closure could be used as an order block too. So I would utilize this order block, which is right next to this candle low that created the BISIs, and it's also right below the 4-hour, right? I'm noticing how price delivered off the consequent encroachment and delivered higher with displacement. So that would be the most aggressive, right? But that still takes your RR from 1.6 to 3 and 3.25, right? So that's where I would that would be the higher risk, right? Maybe you want to adjust it a little bit more. Maybe you want it just at least below the swing point low right here from the consequent encroachment, right? So you can start to just see how price has behaved, right? When price got back above the consequent encroachment of this BISI, when we closed back above it, we created a swing point at the consequent encroachment of it. Maybe I want my stop there, right? Because we know as inversion, we would like to see the top half of it be sensitive. We don't always necessarily want to see the lower half play. So to see how it already played, I could use this low. I could use the actual whole SIBI. I could use the whole low of the entire model in the Judas swing. Or if I want to get really aggressive, you cannot go any higher than really the low of the candle that created the BISIs or BISIs. But I would say the lowest BISI because price has to at least and must be permissible to trade through both of these. And that's what it does. So you've got to at least allow it for that to do that. So therefore there, you'd have to go here, which would give you about a 3.5. Does that make sense? Hopefully that answered your question. Hi, Kate. Hi, Silva. Hi, Singies. I'm going to still go through some examples. I'm just going to make sure no one else has any questions on this specific one. And that's the thing. As a trader, I have to note that I can backtest this and I see this unfolding and there's the model, but I'm not going to be able to participate in it. I have non-negotiables in my trading. One of them is I don't trade Mondays. Another one is that I don't trade in the lunch hour. Another one is that on the first week of the month, I do not trade past Wednesday AM session. Right? Those are non-negotiables right there. And 2 of them are already hit within this, right? It's Thursday on an NFP week and it's lunch hour. I wouldn't have been able to take this trade either way. But what do those non-negotiables protect me from? Getting hurt in an environment like this. Just because I've been trading for 6 years doesn't mean I'm susceptible to errors. And it is very tricky to find yourself trading through here. Right? Why we preach to try to tell you guys, don't feel as if you need to trade real capital in these environments. 70 points is crazy, although the reward is 150 points. Yeah, I mean, don't look at it as that though. Like that's the thing. He said I would put my stop loss at the low of the BISIs as well. Yeah, I mean that's definitely going to be experience, but that's the thing is as a trader, when price gets this close, and I have videos of it on my Twitter if you scroll back enough, I have videos of the market literally getting a point or a couple ticks away from my stop loss and still going in my favor, because obviously it should respect. But yeah, I mean, this is definitely, the more experienced high risk entry. But yeah, I mean, the stop loss, I try to not tell traders to get too caught up in the stop loss, because your stop loss is also going to be based on this Judas swing, right? In reality, what Michael's telling us is when you're aiming for the 2.5, right? The 2.5 is based on what? This. So I'm getting 2.5x of what I'm getting for, and I always can adjust my contract size for whatever, right? It's not that I'm going to lose any more or less, right? I'm not going to lose any more or less. 1% is 1%. Whether it's 1% at, 70 points, or whether it's 1% at 20 points, 1% is 1%. I'm going to always calculate my lot size accordingly. I'm always really honestly on average risking 0.5%. If I feel as if my stop needs to go here, I will risk 0.5%. If I need to feel as if my stop can go here, I will risk 0.5%. Right? That's totally fine. Whether it's 53 points or it's 100 points. I'm aiming for 254 points. So overall, that's why I try not to get so caught up on risk to reward too. Right? I tell people all the time, if you have a 1-to-1 risk to reward, 1-to-1 risk to reward, right? And let's say you flip a penny or a quarter, you flip a quarter 10 times, right? You will always come out, and let's say heads is +1 or oh, I guess that would be 1 to 2. But even 1 to 2, right? Even 1 to 2. If you sat there and you just aimed for 1 to 2, right? Very simple. If you flipped a quarter, heads +2, tails -1, and you did that 10 times, I guarantee you would come out positive, right? If you flipped a quarter 10 times, every time you got heads, add 2. Every time you got tails, -1. You'll always come out positive. I'm almost sure of it. So don't get too caught up in the idea of so many points. Because if you're swing trading or whatever the case is, that's all relative. It'll all be relative. I think over time, yes, you can get to the idea of you will be rewarded more by as you get refined, but the risk is the same. The reward is the only thing that changes. And you don't want to be, this should not be your main focus, right? You want to, before you can start to get a grasp of how you can refine this, you need to get a grasp of how you can refine down here, right? Notice how I don't spend too much time talking about all this stuff, because overall, you need to get a grasp of how to do this. Stop loss placement is more important, right? And there's nothing wrong with this. There's nothing wrong with this, right? You're giving your stop. This is the model, right? This is what Michael teaches us that's supposed to happen. And so the model is not put your stop loss here. That's the thing. That's not part of the model. That's up to the trader. That's not the model Michael teaches. Michael teaches that the stop goes at the low, right? He's doing that because he's giving you a safe route to profitability, right? There are times where you will put your stop loss here and you will get stopped out, and it will go in, it will retest and invert this SIBI at full, right? There are times where you will see even more high resistance areas, it'll come and do that. And guess what? If you used this stop loss, you would have gotten stopped out, right? If you use this stop loss, you wouldn't have gotten stopped out. There are times where it will go even so far, and I've seen it before, maybe it wants to go to the mean threshold of this order block right down in here. So even if you used the inverted SIBI, you would have gotten stopped out. The only thing that would have protected you is having it at the low. So you want to keep that in mind, right? You want to keep the environment in which you're trading, right? I would not feel safe to put it at that low right here. I would want my trade, quite frankly, in this type of environment, if someone had a gun to my head and made me get into this trade, I would put my stop loss at the low. On a 100K account is 1K stop loss. So for 70 points, will you have to do 5 minutes? Yes. You would have to do mini or micros. Yeah, you would have to use micros on this. Let's keep looking. Shall we? Let's go back. Let's go back. And if you guys have a different asset class that you want to utilize too, you can. So this week was a little bit of a weird week. Let me get back off of this though. Let's see how the week played out here. Okay, so we'll go to NFP Friday. Look at Friday's price action, right? We had a 4-hour BISI in here. Right, the second I go to a 5-minute, I see two potential ones on a 5-minute. I'll let you guys take a second to potentially look. And I know Henry actually traded this or some of this. I'll give you guys a second really quick to just look for what potentially could be here. Give yourself a good shot. To me, I see two potential ones. Okay, so we're pushing into here, right? Price comes into here. I'll come back into here as price plays. Right, we're on a 5-minute time frame. You can also note that price also pushed into this as well, if you even wanted to too, right? Just as confluence. And we kind of already know what happened, and that's okay, right? Price makes a low, so we have market structure high right here. Market structure shift. Opposing liquidity in the form of a low. All right. What do we need? What do we need next? I'll have someone put it in the chat. Right. So we have a market structure shift, not that has yet occurred, but we have a swing high. The opposing liquidity has been taken. We are in it. So I'll go back a little bit. I'll go step by step. Deliver into a higher time frame PD array. Have we done that? Yes, we have delivered into a higher time frame PD array. Have we taken some form of opposing liquidity? Well, if we are in a discounted array, which we are, right, which is a BISI, if we're in a discounted array, what would opposing liquidity be in the form of? A low. So we've taken that right here, right? So now what are we looking for, right? I already kind of gave it away for you guys. We're looking for displacement above the market structure shift. The high taken, right? So now we're waiting. There's no trade set up here. We're just waiting. Oops, that's a little too fast. All right. Boom. It should jump out at you, right? Yes, you can say there was multiple pools of liquidity taken. That's fine. That's fine. That's just, it's the idea, it's the context. Opposing liquidity was taken. Did we take the market structure shift? Yes. Did we use it with a displacement? Yes. What time is it occurring? Right? 9:45, 9:50. Bingo. Right? Now time is aligning. Now, if you think about it, it's NFP though. Right? Henry obviously displayed that, yes, you can be profitable on NFP days. We do not want to encourage that at all, right? Henry trusts himself and his confidence throughout his development, and it's something that he's okay with, right? Overall, it's the self-awareness to understand your risk appetite. If Henry is okay and trusts himself in his development, it's not an ego thing. It's not a going against his rules thing. His rule set allows it. Mine doesn't. We are two different traders. Right? That's totally fine. That's totally fine. Maybe Henry gets to a point later on in life where he doesn't really feel like it's worth it. That's totally fine. Maybe I get a point in my life where I get a little bored and I start to allow it. We both can trade it. We both are like, it's not that it's harmful to us, which we know it is, but at the same time, we're experienced enough where I have watched hundreds of NFPs, right? So it's one of those things where as you start to grow, but it does myself and Henry a disservice to try to teach you guys that it's okay to do it. Because this will be an example where it does play out and you can trade NFP. Now that's the thing. NFP was right here. That's another thing that I want to get in front of you guys too. NFP was this, right? And that's the main thing that we want to get across to you, is that you do not want to be in the market when that happens. Can you wait 15, 30 minutes? And Michael has even talked about this too. Yes, you can wait, let that volatility die down a little bit, right? If you guys were in my room, we were all talking about this, right? Most of y'all even saw it before it happened. Consolidation or accumulation of orders. Everyone thought we were going to manipulate down and go higher. I saw multiple people that were in this room say that, right? We all talked about it. It was just a matter of how deep we dug into that stuff. Right, and you can see we dug into the 4-hour BISI, kind of respected it, and now we have some form of model, right? We've got this BISI now. So now that that's set up, as price returns into that, right, we have to note that there's a BISI below us too that could potentially get filled. Doesn't have to, and through your development, you could start to identify why or why not it might. That's not something we'll talk about on this call, but I'm still going to go with the idea that it could potentially fill. Right? If that's the case, right, this would be our, well, we'll wait for an entry. That's your entry. you should enter on that, right? That's your entry. This looks like a crazy stop loss. I know. It is a crazy stop loss. But in reality, based on the model, that's what it calls for. Right? What's 2.5 standard deviations from the Judas? Is there any highs in and around it? Aha, there's a high right here. Right? The high is where the liquidity is residing. That should be my main target. Right? So now I have all the context for the trade. Can you put your stop loss right here? Yes. This is all by context on only this time frame too. As you get better, you can go into smaller time frames and refine it. Could you put your stop loss right here? Yes. Could you take the equilibrium of this rejection block and put it here? Yes. Is there a SIBI right here? Could you put it below the SIBI? You can do all these things, but we're backtesting Michael's 2022 mentorship model, and the model states that the stop loss goes at the low. That's your safest thing, right? And I encourage you to put the stop loss here. The reason why you get fearful of putting the stop loss here is because you believe that it'll get hit. You can't imagine that if your stop loss was down here and it got hit, oh my gosh, what would that feel like? Shouldn't feel like anything. Because if you're risking 0.5% per trade based on your plan, then you're risking 0.5% based on your plan. You already know what you're going to lose, right? Before I get into a trade, I know what I'm going to lose. I emotionally write that through my head all the time. I sign off on that, right? I'm risking 0.5% per trade. Whether it's 442 or 442 points or it's 42 points. It doesn't matter, right? I still have a positive risk to reward. I'm not focused on risk to reward, right? Because I'm following the model. And if Michael's teaching it, odds are it's damn good. So if I can just trust the model, then over time, I will find more and more about myself in the model and I can maybe refine things. But just playing with the simple model, can you take partials above here? Yes. Is it encouraged? Yes. If you take partials, can you move your stop more higher and higher? Yes. Could you move it at this low down here? Yes. Could you move it to break even? Yes. Once you take partials, right? 1-to-1 was right above the highs. I would say you take partials here. Then that allows you to get rid of this godforsaken super big stop loss, right? You could move it here if you wanted to. Totally fine. That's up to you as you go through your backtesting and your data, right? The main focus of this is just to show you guys how to potentially find this stuff. And you can go through and you can find it. You can go in on smaller time frames and find it, right? Over time, you start to note what you would do and what you should do and what you shouldn't do, right? This one was perfectly aligned with our time frame. You have accumulation, manipulation, ideally expecting distribution. You're in a higher time frame 4-hour PD array. Opposing liquidity has been taken. A market structure shift with the displacement in the form of a BISI. Stop loss at the low. Aiming for in and around relative equal highs or lows. And relative equal highs could be relative equal highs. These are really, when I say relative equal highs, you might say, Carson, well, that's a single high. Well, you've got to look at it from a gray perspective. These are relative equal highs. This high, and this high, and this high all look like a triple top to a retail trader. Where are they going to put their stop loss? Well, odds are when you're looking at liquidity, you want to look at the highest one. because the retail trader is going to think, oh, well, if this is the triple top, right? If that's the triple top and it's going to respect, my stop loss is going to go with the highest one. Because they're thinking the same thing you're thinking, right? That's the safest area, right? So from there, you let it play out. You're going into the PM session now. If you guys know what already happened, as you should, it doesn't take it. Oh my goodness, Carson, why? I held all that for nothing. Well, it's just called unfinished business. Unfinished business. Right? Unfinished business. If you're holding it, you hold it over the weekend. That's perfectly fine. If you don't feel as if you are holding it over the weekend, right, at this time, you very well should have already taken a partial right here. Good, you paid yourself. Odds are you probably went to break even too, especially if you're holding it over the weekend. I assume that's probably a trading plan. If not, that's okay, but I assume that it is, right? It's just unfinished business. You have relative equal highs up here. Price is engineering more liquidity, so therefore take it. If I had to bet, we take it by Wednesday of next week, right? Where could price potentially return to? Well, there's just inefficiencies below us, right? It's just a longer move. And that's why these extensions are so important. And what you're going to start finding out is maybe you're not holding, and as you should not, hold your entire trade to negative 2.5, unless you are really good at what you do and you don't necessarily need to see results right now, right? Someone like myself or Henry, yeah, we've made money in the markets. We don't need a trade like that. We don't need that for ourselves. But I would say, if you're a beginner, pay yourself at the -1. I would also say pay yourself at the -2. Or a -1.5. I would also say pay yourself at the -2. It didn't even get to the -2. And so also, if you're also another trader who likes to trail their stop, you could have trailed your stop in here. You could have moved it here. You could have moved it in here. You could have even moved it in here. You could have even moved it in here. And as you're getting closer, you could have even moved it in here. And guess what? You would have gotten stopped out right there. Now you don't have to deal with it over the weekend, right? Well, Carson, how do you trail your stop like that? Well, it just takes practice. It takes waiting for trades to unfold and displacement to occur, for lows, in this case, for BISIs to be created, right? BISI right here. You would want to see a low formed and a new BISI created. Oh, there's a new BISI right here. Guess what? You could start to study by putting your stop at this low. All right? Price kind of overextends. Guess what? New low is created. BISI is here. Maybe you put your stop loss right here and you get stopped out. Oh, but Carson, I got stopped out. Who cares? You got stopped out in profit. You made money. That's why it's not about being right. That's why it doesn't matter. That's why it's not a game of being right or wrong. It's about being profitable. Knowing how to manage losing effectively. And from that point on, knowing how to squeeze as much as you want out of the limit. A lot of you guys go into trades and you don't know what you want out of it. Right? You have to know what you want out of it. You have to know what you want to sit through. How long do you want to be in front of the charts? How much money are you willing to get out of it? Right? What are you willing to risk? Are you okay holding are you committed to holding that trade overnight, over a weekend? You can't make those decisions while you're in a trade. Those are all decisions that need to be thought through prior. If you fail to prepare, prepare to fail. This is a game of preparation, and you need to prepare thoroughly. The reason you gain confidence is not only through evidence and proof, but also preparation, right? You guys were sitting there and you guys were ooey gooey eyes over Henry's swing trade that he's had, even though it was demo and he wasn't even making $1, but you guys were still praising it. Why is he able to do that? He did not make the decision to hold the trade while he was in it. It was a precursor and already thought out previously before even pressing the button. It's all part of his plan, right? It's all part of his plan. You don't create the plan while you're in it. Can you talk about these 15-minute market structure shifts on the bearish side with all the inefficiencies to the downside? Yes. Hi, Leah. Who cares? Yeah, so we'll talk about the downside for a second. And that's the thing is, like, I'm not going to sit here and sugarcoat this stuff. This stuff is hard. But a lot of times people get into trades and they don't have anything planned. You have to have a plan. And that's not even the hard part. Like, that's not even the hard part. Having a plan is not a hard part. We can all make plans. It's how well you follow your processes and stick to the plan is the hard part. So, like, if you don't even have a plan written out to follow, you're not even into the hard part yet. The hard part is following it. And that's what really, really takes practice. All right, so looking at like the 15-minute on the downside, you have a couple things. I'm assuming you're looking at this low right in here. You're looking at this low in here. Right? You've got this low in here. And then you've got the NFP low. Right? I'm looking at all that stuff right there. I'm going to take my range from the low into the high. And I'm going to look at where my discount and equilibrium are. Right? Equilibrium sitting here at 17,619 3/4. And I've got all of these areas that price could potentially target. Right? I've got a breaker right here. I've got a breaker right there. I also have a BISI right here. Right? So I could clearly see, just because this is selling off, like I said, this is unfinished business. This is honestly what I love to see as a trader, right? Because if you were Henry, you don't want to necessarily see it because you want that ran, because he was a participant in the market. Someone like me who didn't participate on Friday, I like this because this is giving me a setup right here. This is like, right? Now I need price to come lower into a discount so I can look to be a buyer, right? That's what I'm looking for. But just looking at this on a 15-minute time frame, I would clearly like to be confident in saying that we could potentially come and take this low. And then as we go into the equilibrium things, well, there is this breaker, and you do have a BISI right here also inside this breaker. So maybe price only wants to come as low as this and go higher. Totally possible. I don't necessarily see a deep retracement before taking out this. So that's what I would kind of expect. But if I sit here and I go even on, like, I'll go drop down one time frame just to see if I can get a swing point really quick. Even if I was to sit here and use like this as a fulcrum point. Oops. Sorry. Let me get the negative half. Right? I could see this potentially being hit. Right? You've got a little bit more inefficiency down in here. I like that this long wick, I don't see us stretching in here. I would see us stretching as far as this 5 minute in here, because there's another breaker. In reality, the 5 minute paints it. The 5 minute paints it better for me, honestly. The 5 minute paints it way better. You've got liquidity in here in the form of sell side being this low. You still have an inefficiency left to fill. You've got a negative 1 to 1 based on this last up move that takes out this, right? So you've got a Judas in here, right? And you could even wonder if that's, no, that's a little too low. Yeah, so the most recent energetic swing higher, taking this, use that as a Judas, comes down in here. You've got a breaker right here, right? Low, high, take out the low, take out the high with displacement. You've got a BISI inside of that. So if for whatever reason price visits this, like this is an area where I would look to buy on like a Tuesday. I would let it come in because I see that it's got that -1, so it might throw a wick down in here. But then as price starts to come back higher, I would look to see on like a 1 minute if it gives me some form of buy entry. Right? So as I start to see this, right? As I start to see price push back up into that area, I would like to potentially see if I could, you know, find something on a lower time frame, something like a 2022 mentorship model, right? Where if we were to scale in, right, if we were to take this area, if we were to take as to what price could do in this area, right, on a 1 minute time frame, right, if we were to look at 1 minute time frame, what would we look for, right? That's what we would look for, right? And this is what I do, and I trade this model. It's not that I don't trade this model. I trade this model. I see this stuff all the time. I just tend to sometimes have a little bit more stop loss refinements, like are a little bit more experienced. So I'm not always taking it at the low, but I see this stuff happen all the time on a 1 minute, right? So the higher time frame is my 5 minute. I'm looking at this on a 1 minute, and I'm doing this, right? And I'm aiming for the 2.5. I actually will hold till the 4 for most times. Really, for me, I'm using the -1, the -2.5, and I'm using the 4. That's really what I use, right? Because I'm usually trying to have 2 partials and a terminus all the time. And I will sit here and I will rip this on a 1 minute, right? I will do it day in and day out, 2 to 3 times a week if I can, depending on the draw and liquidity, right? So Carson, what's gonna allow you to increase size, right? What's gonna allow you to increase size? That's what I look for right here on a 1 minute. This is what this is how I trade, right? Because what I look for, I like to see, odds are there's a breaker in here. If it lines up, that's great. But then I start to read this entire form of price action, and I start to see, like we've been talking about, where's the best area. Even though this is the safest, that's okay. I'm experienced. I can figure out. I can read the narrative and what it's talking about on that 1 minute. I'll look to see what it looks like on a 5 minute and a 15 minute as this has been created, and if it's safe or not to at least bump it up to there, right? And this is where I start to get ideal entries on a 1 minute. And then from there, I'm watching it, I'm tape reading it. I'm always taking a partial at 1. And if I take my partial at 1, I'm not always moving it to break even either. I might move it in half. And then I wait and I see if that 2.5, and what's going to cause me to increase my size on my trade. It is dependent on whatever the case. The draw and liquidity is the main thing, right? The draw and liquidity. Seeing this, yeah, buddy, I'm holding. I'm taking away I'm not focused on the -4. I'm focused on this high right here, right? I'll take out a partial at the -1. I'll take a partial out at -2.5. but I'm holding the rest of my majority up here, right? Because yes, the -4 is cool, and it lines up with the fill on this SIBI. Let's just say, for instance, hypothetically, but in reality, I know the algorithm will deliver to 17,794 in a even. That's where the liquidity is. That's where the market pays itself, and it's going to pay me too. So I'm going to hold to that. So now my RR just went to 10, and I'm not focused on RR either. That's not a real 10.5 RR, right? It's dynamic. It's not static. I'm not holding the entire trade to that. I'm paying myself the portion that I should always in every single trade. Because guess what? Do I hit this all the time? No. Do I at least get this? A lot of times. A lot of times I'm getting this. Right? I would say upper portion of 70% to 80% of the time I'm hitting this. Am I able to sit here and move it to break even from there? Not all the time. Does it sometimes come back and stop me out? Yeah. But this is where you need to get consistent with, is taking this. And then over time, you will learn to hold to this. And then over time, you will learn to hold to this. Right? Shout out Kate. She just had a trade that she held pretty long for this Friday. But this is what I'm looking for with regards to, I can use my higher time frame as a 5-minute. On a 1-minute, look for something like this and use the model. Sorry, I just got off on a tangent there, but that's how you would view it, right? You're zooming into a 1-minute, looking for the model using the 5-minute there. So that, I mean, that's what I'm looking for with regards to NQ, at least going into this week. I would say that it probably returns to there, if that. It might not even get that. It might do that up here. We're in such close proximity to this, it might just take this low and go. All right. I'm going to just kind of roam around these charts. I'll go to ES for a little bit. I need to put a new song on. Sorry about that. Any questions before I actually just dilly-dally around? Any questions or anything that you guys want me to talk about? Any specific pairs? Okay. Sounds good. I'm going to keep on rocking and rolling. Leah. I'm waiting for just to see if she wants me to look at something, and then I'll flip over. I can't see my Discord when I go in the chart, so I gotta flip back and forth. Hope everyone has had a good weekend. After the more I do some of these things too, I'll kind of get an idea. Maybe I want to bring examples to it. This is the first one that I've done, so I kind of just freehanding it. Leah got shy. She's not saying anything. I'll wait for Mauricio though. Gun to your head. ES 4,800 at least by the end of the month. 4,800 by the end of the month. 4,800 flat. By the end of February? 4,800. Hard to say, my man. I don't think so. I don't know. That's hard. Just because March, maybe, yes. I'm not as bearish as all these other guys, though. Because these other guys, they want to be... What's that one guy they called the market crash? They want to be that guy. Like, that's the thing is, all these guys on Twitter, yeah, I can see it. I can see the market crashing 100%. I'm not going to call it. I'm not going to call the top. I'm not going to do any of that stuff. Because all those guys are going to get ran through on days like this, right? Where prices continuously showed us bullish momentum, bullish sentiment, bullish order flow. So yes, do I see all of this taking place? Yeah, but now price has to get through this order block. You've got these volume imbalances, yes. Until if price can deliver below, I think if price delivers below this low, if we get below 48.66 flat, I think you have a pretty quick run into 4,800. Yes. If it happens in the next month, I don't know. I have no clue. I've gotten so burnt trying to be that guy. Try to be the guy that says price is gonna collapse. I've gotten so burnt so many times trying to do that, trying to call it publicly. All that, a lot of that, those guys, yes, they might know what they're doing, but a lot of it is ego. They want to be the guy that said, "I told you so." And it's with what price action is giving me from a weekly perspective and a monthly perspective. There is nothing here that is signaling to me that we are going lower right now. I have to stick. We just hit the -1 standard deviation. So I'd be curious to see how we react off of that. If I could see a potential signature in price on a 4-hour or a 1-hour, right? If we start to see a 4-hour, 1-hour, or 15-minute where price starts to do this, if we start to see something like this on a 4-hour, 15-minute, or 1 minute, I will start to look to these, not 1 minute, excuse me, 4-hour, 15-minute, or 1 hour. I will start to look to see how price wants to play within these volume imbalances. If we cut through that, then I will look to see the order block, right? If we get below the mean threshold of this order block, then, yeah, we could potentially make a run. If you start to slip at 4,900, if you want to be the guy that can start to maybe assume something, I would assume that if we start slipping at 4,900, then yeah, you're going to probably go to 4,800 and fill all this, right? I could see that potentially playing out. And I would assume it happens relatively quick, yes. But until that happens, I have no reason to believe that price goes higher, or lower, excuse me, lower. I mean, and I get it. I get the idea of the whole economy and the world and everything that's going on would cause for this to collapse. 100%. That's totally fine. Like we've talked about that. It's one of those things where you will see it. You will see it. And if you want to, and either whether they were right or wrong, whatever the case is, they could be completely wrong and still figure out a way to say, "I told you so." But until you deliver below this, which will probably be displacement, I've seen it multiple times. Like, you will see a very clear turnaround on this. Let it show you. Don't worry about 4,800 right now. That's very far from where price is currently at. Right? You need to be focused on really how we react at 49.80. That's the main focus, is 49.80. And really the weekly high, which is 49.97 and 3/4. But it knows people know that we are so overextended, and it knows the way traders think. And it knows people can get a sense for there's no way this thing can go higher and higher and higher. Oh, buddy, it can. It for sure can. So just keep that in mind. Yes, I think that I will say this. If we slip at 4,900, I guarantee you that we probably get to 4,800, if not the same week, the week after. Right? And that would be my best guess. But right now I like the idea that we hold this low in here and run higher and continue going higher. On a 4-hour, we will look at this. I actually want to look at some further price action. Let's look at I don't want to necessarily cherry pick a lot of this stuff, but I will look at this. Let's look at this. 4-hour busy. Right? It would be cool to be a buyer in here, right? I wonder if there was an area in which we could see a 2022 ICT market mentorship model. Let me find that. I just got so lost in price. Hold on. Here we go. Oh, this thing just spiked. Never mind. That's not a good example. Never mind. I will find one. I promise. This could work. I need new music. Anyone has any song recommendations? Hold on, let me just play. Okay, so we'll use this 4-hour business as a context. We'll go into a 5-minute. I don't know why I'm using the 4-hour and 5-minute, right? You could just use whatever you want. I'm just using that because it's just, I don't know, it just is what it's on my mind. It's just what I'm going with. All right. Close. No cigar though. There's no displacement right here. There's displacement right here, but still wouldn't want to use it. I'm actually going to go in on a lower time frame. I'll go in on 1 minute if it allows me. It's probably not going to fucking allow me. We'll see if it allows me on a 4-minute. We'll go on a 4, 3, 2, then 1. Bingo! Before I put anything on it. Y'all see it? Lots of ICT traders talking quarterly shift, seasonality, etc. 40, 86 is my break even. Yeah, Romeo said something very interesting. Pick bottoms in bullish markets and tops in bearish markets, not vice versa. Yeah. I mean, it's, I follow all those guys too, and I see what they're saying. I trade on, quite frankly, I trade on the 1 minute, and I trade for, that's the thing, is like I know me as a trader, and none of that stuff does me any good. I trade on the 1 minute time frame, and I hold for no longer than 2 or 3 hours, and I am, all that stuff is just, guess what? If we go lower, and I'll be in sells. Like, I'm not going to be in the top. I'm just going to be catching little tiny moves throughout the entire thing. I can't swing trade. Like, I'm starting to practice it a little bit. I know Henry's been practicing it too. And I'll start to use it if I start to practice it and I feel comfortable. But it's just not me as a person. I'm not good at swinging. It just causes me stress. I've got to fight it, my emotions a lot harder. Leah said swing trade's much better. I can't do it. I won't sleep at night. I think about that trade. I literally lose sleep. That was always my hardest thing, is I never got good sleep. Ever. I cannot step away from the charts if I'm in a trade. Does anyone see the 2022 mentorship model here before I start marking it out? Anyone see it? Can you see it? It should start to glare. I'll mark it out. Arish, can you see it? I see you're typing. I need to get a new headset. Swing trade's much better. I mean, they are better. I would think in a perfect world, and I'm gonna practice more and more. In a perfect world, I'd be able to just the more the merrier, right? Gosh, I just can't sleep with the idea that I've got it in there. And that's just a me problem, right? It's just something that I got to figure out. Okay, so back to this. All right. Higher time frame PD array. Opposing liquidity. right? Market structure shift. Bingo. What time do we deliver? 10:32. 10:56. Love it. AM session, New York AM session, silver bullet, whatever you want to find. 2.5. Does it align with a high or relative equal highs? Yes, it does. You bet your sweet ass it does. Sorry for my profanity. Right? Does it align with equal highs? It does. There's your BISI. You would probably enter in on that one if we're being honest. That would be your low. There you go. Right? You would enter in at 10:32. You would get exited out at 12:48. So it's like a 2-hour trade. You can take partials in here wherever you see fit, right? You can take a partial right there. Very clean relative equal highs right here. Take a partial right there, right? So overall, that's the model right there. Where could you refine your stop? Well, you could use this low, which is the safest. You could use this low. You could use the mean threshold of this order block. All right. You could use this candle, which I would beware because it doesn't necessarily have a wick, but you could use that. Right? You could use the breaker. Right? And I would say no more than that. Unless you went on a lower time frame. Just based on this time frame, I would say no more than that. But does that make sense? Right? Very clean. And that's the thing for me, for someone like me who doesn't trade at lunchtime, and I try to be out of my trades at lunchtime, right? Odds are I'm closing the I'm either closing the trade or trailing my stop, right? I trade very differently, right? I'm either trailing, but the second it hits 12, I'm either automatically closing my trade. I'm either, let me take this magnet off, closing my trade or just trailing my stop right here, and then trailing my stop right here. And then trailing my stop right here. And I'm very tightly trailing my stop because at this point, I'm not worried about whether or not it stops me out here. This does not matter to me, right? It's the time aspect. I want to go eat. I want to get to lunch. I don't want to sit here and stay for long. Right? I trade for my time. Oops, I don't want to delete that. So I'm trying to get in the market and get out of the market. I don't want to hang around, even if it's worth a couple handles. But until that point, right, until we get to this point at 12 o'clock, yes, I'm very, I'll take a partial here, right? I'll take a partial right here. I like that there's imbalances right here. I like that I have a breaker right here. I'll move my stop to this low, right? Once we trade and I see this displacement, I'll move my stop to break even. Once we run here and I see it start to consolidate, right, that's when I'll start to trail my stop all the way up there. But through the majority of it, I will let it breathe. And that's the thing is don't try to mimic me as a trader. It won't work because you're not me. And if I tried to mimic you, it wouldn't work because I'm not you. You have to do enough in these markets to figure out who you are.